The bulls grind slowly higher Friday. Did the bears miss their chance? This is Invest with Jacob.
Okay, guys, so on Friday, it looks like the Bears gave us a 4-5 move to the downside before the Bulls took back control and started to push higher. And now the question is, how high can the Bulls push? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, so the Bears did finish off the move down from Thursday with a 4-5, and then the Bulls started to push up, which we would expect. So now let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And as you can see, they gave us the strong move down on Thursday to give us a completion of a wave 3. They gave us a spike up in 4, down in 5 to complete potentially wave 1 of C or some other options here we're going to go through. But essentially, they completed the move with a 4-5, and then we saw a bounce from the Bulls back up toward the 44.20 area. So now the question is, what comes next? So overall, we're looking at a few different things. With the push through the pivot last week for the Bulls, they didn't invalidate the Bears. They didn't make it so we can't go down in our bigger C wave count. They just made it more difficult and less likely, as it would have to play out in a diagonal, and you know we don't trust diagonals. So what we would look for is a few different things. The first thing would be that this move down was a wave A. You have a wave B up, and then we'd be starting C down where you'd get a wave 2 bounce, and that wave 2 bounce should come up to the 44.26 to 44.58 area. If they get above 44.58, it starts to get problematic for the Bears. So they would look for that bounce into that area, and then they'd look for the next move down, which would come with ultimately a move to 42.81, a bounce, another move down to 42.36, a bounce, and then ultimately down to the 4200 area for an ABC off the high to complete a bigger wave 4, where this would be bullish 3 of 3. This would be bullish 4 of 3 to the downside, and then from there we would expect them to start 5 of 3 to the upside, where we'd get a pretty strong move at that point. So that's the first expectation of what we would look for, given our overall setup as we have it right now. The second thing would be, if they come down and this is an A, okay, so you'd have a wave A down, and instead of a 2, you'd have a B, and then you get a wave C down for a wave 5. Now you're asking, why is wave 5 an ABC? It's because this would be a diagonal at this point. So when they moved through the pivot, they moved up into wave 1 territory, which is expected. Also invalidates the impulsive count, but not the bear count overall. You can still have a leading diagonal. Diagonal's hallmark is that, 1, they are 3 waves for all 5 of the waves, and 2, the wave 4 enters wave 1 territory before continuing to the downside. And so what we would see here is just the completion of the 5 down. So you'd have 1, 2, 3, the bounce on Wednesday of last week would be 4, and then we'd look for that ABC down, but it would stop in the 42.81 area, 42.80 area. It would be below 4,300, but the overall point here would be that they would stop and you'd see a sharp retrace, because when diagonals end, that's what you see, whether it's going up or down. If the diagonal is going up, you see a sharp drop. If the diagonal is going down, you see a sharp bounce. So that would be a big clue that the diagonal is playing out. We get a move down into the 42.80 area, okay? Mostly breaking this low, but you'd like to see 4,300 to 42.80 as the target. So once they break this low, the diagonal becomes an active count, but to kind of give it a more standard look, you'd want them to come down into this 4,300 to 42.80 area to complete. And then you'd want to see a pretty sharp retrace in 3 waves back toward the 4,500 to 4,550 area, which would be back up to the origination point of the diagonal, which is what you would expect. Right here is the 4,550 area. So we'd look for a pretty sharp retrace, and then you'd look for an impulsive move down in 1 of 3, 2 of 3 bounce, and then on down. So for the diagonal to play out, there's 2 things we're looking for. Number 1, we're looking for them to break this low and hit in the 4,300 to 4,280 area. And number 2, once they do, we're looking for a pretty sharp bounce out of that area where we see them retrace up toward the 4,500, 4,550 area for wave 2 of a bigger wave 1 of C down to start this move as a leading diagonal. Now, until we get that and follow through to the downside, I won't be trusting that count too much, but it is something we need to keep an eye on, as they do have that potential, especially given how this is played out to the upside. And then the final count, which I don't love, is that we are already done with the move down. This was a wave 1 up, but it would have to be a leading diagonal because it is not an impulsive structure. And then we got a wave 2 retrace that was very deep, which is what you would expect off of a diagonal, so that makes a little bit of sense. And then you'd want to see them come back and take out this high. Now, if that's the case, and they come back and take out this high, and they're able to sustain that rally up past 4,500 towards the 4,550 plus area, then it becomes much more likely we are already in wave 5 of 3 towards 4,800 or so from there. So if the bulls can break out in an impulsive structure and take out this high from last week, which is 44.8575, so we'll call it 44.86. If they can take out 44.86 in a pretty direct manner and it's impulsive, okay, so they come up in an impulsive move, a 5-wave move, and take out this high, then we would start to have to consider that this was the bottom of the wave 4 of 3, and they're already starting 5 of 3 higher towards the 4,800 area. So 3 paths that we're looking at. Just to recap them real quick. The first would be that we're in an A, B, C down to 4,200, then up. Okay? Now that 4,200 area is critical for the bulls. They really need to hold that. Otherwise, they're going to have a diagonal look off of the bottom. And from October, where it would look like they're trying to make an ending diagonal, but then it becomes much less likely that happens. So that 4,200 area, pretty critical. That's our first count, the ABC to the downside. The second would be the leading diagonal for the bears, where you have 1, 2, 3. This bounce up was 4, and you're looking for that ABC down in 5 to complete around 42.80 to 4,300. Then you'd look for a sharp retrace back towards 45.50, and then down from there. So that would be our next clue. Or our next option of what we're looking for. And then finally, we would count the last thing as bottom is in. This was a leading diagonal to the upside because it's very corrective looking. We got a sharp retrace for 2, which is what you would expect. And then you'd look for 1 of 3, 2 of 3, and then 3 of 3 to break out in an impulsive manner over this high at 44.86. Over on the NASDAQ, I've changed around a little bit from last week if you've been watching the count. I originally had this as a 5-wave move down. The only thing I didn't love is that this move was a little bit extended. It wasn't invalid or anything. I just thought it was a little bit long for a wave 5. So I was expecting to see this more as a wave 3 and then looking for a 4-5 to complete. We obviously didn't get that. So I am looking at this in 2 different ways. The first being that this was wave 1 down. So we got 5 waves down. This would have been wave 2 up into our target box. 1 of 3, 2 of 3 would target 15,078 up to 15,258, above 15,258, and it becomes problematic for the bears. And then you look for a breakdown from there that breaks this low. And if you see this move where they bounce up into this target area, then come down strongly and break this low and start to snowball to the downside, then we are going to be watching the 1.0 extension because that would be our alternate count at 13,963. They must hold that 14,000 area, and if they come down and blow through 14,000, then it's much more likely we're in that bigger C wave down, and we're already in 3 of 1, which would target around the 12,500 area down here. So that would be the first option, is that this was a wave 1 down off the top. This was a wave 2 up, 1 of 3, 2 of 3, and then the 3 of 3 breakdown. And if they can get through 14,000, that is very bad news for the bulls. And it would lead me to believe that we're in a much bigger down move on the NASDAQ, which would lead me to believe that the ES would follow suit. The other option for the NASDAQ is that we are in an ABC, where you have the B wave up and you'd be looking for C down towards that 14,000 area. They do need to hold that area. It's a very critical place for them. The 1.0 is actually below 14,000, so it's a little bit of a tricky spot for the NASDAQ in that zone. And then the third option, of course, would be very similar to what we saw on the ES, where this was the whole move down for wave 4 of 3. And this would be 1, 2 to the upside, and then you'd look for 1 of 3, 2 of 3, and then the breakout back to the all-time high area, or I'm sorry, the recent high area, and then ultimately the all-time high area after that for wave 5 of 3 in the 17,000 range, and then a pullback and a push higher towards 19,000. So a couple different options on the NASDAQ. If the downside plays out, it's really only one thing we're watching. We're watching the 1.0 at 13,963, or basically 14,000. 14,000 breaks, and they can push through the 1.0, then it starts to look pretty bad for the bulls. If they can come back and take out this B wave high here in the blue target box, then it is looking pretty bad for the bears to the upside. So there's a couple different paths inside of there, but mostly we're watching 14,000 and 15,000 for 18, and to see which one breaks first. And also we would like to see an impulsive move in whichever direction they decide to go. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. Takes you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial, because I want you to get in there. I want you to make sure you love it and become part of our trading team before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners course. This course is helping traders truly understand the market, how to trade it, and how to make money using Elliott Wave Theory instead of trying to decipher the news cycles. It's very beneficial to people who throw up their hands and say the market is rigged, or don't understand why NVIDIA's earnings come out and smoke the earnings and they get sold off the entire day. Where things don't make sense, Elliott Wave makes sense of them for you. As you can see from the testimonials on the screen, it is helping real traders make real money. It's 25 videos in 3 parts. The first part's the introduction, where I give you the expectations, your mindset, the KISS method, and why it works. The second is the chart setup, so you have all of the tools you need to use with Elliott Wave Theory to give you confirmation of market turns, market bottoms, market tops, those types of things, as well as the third part, which is the Elliott Wave for Beginners area, where I go through all of the Elliott waves, including the corrective zigzag and the impulsive moves, how to identify them, what their targets are, when they fail, all the different things you need to know to understand the market. So again, you can trade successfully instead of not trying to understand the news cycles. The cool thing is it is included in both rooms, and if you become a monthly member, you get it for free. In the first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months. So we don't trade quite as often as a day trading room does. However, if you are looking for day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trade that's so unique. Something you kind of have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where you put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, the key takeaways for today, we're basically watching a couple different things. The 4280 to 4300 area is important to the downside. If they hold there and we get a sharp retrace, then it does look like we've completed a leading diagonal to the downside. If they break through 4380, then it does look like we're getting the bigger C wave down towards 4200, which becomes a must hold for the bulls. To the upside, if they take out the high at 4486, then it does look like the bulls are trying to take control of the market and put us in wave 5 of 3 already, which would take us toward the 4800 to 5000 area. Over on the NASDAQ, we're watching the key number to the downside at 13,963. It's really 14,000. The bulls must hold 14,000. If they do not, things get ugly to the downside for the bulls. To the upside, the bears need to hold that 15,418 zone above that, and the bulls can take back control and take us up toward the 16,500 to 17,000 areas. Guys, that is your market update for today. I will talk to you tomorrow.